All right. Good morning. What do you send the message chat box? Just type a yes. You can hear me clearly. Type a yes. My volume is clear. Please type type it yes. You can hear me. Type a yes. All right. Can you hear me now? Can you hear me? Please, if you can hear me, just type a yes. All right. Thank you. So once again, my name is Don. I'll be handling the analysis this morning. I want to welcome you all to today's money market review. So we have about 45 persons in attendance. Have about 45 persons in attendance. That's the big number. Start. All right, thank you very much. So your message seen. If you have any question in the course of discussion, please feel free to drop the message in the chat box. As the lecture is going on, I'll be going through the messages. So at interval, I will pause and then read the messages and answer your question, or read the message and answer your question. So let's start off by looking at the calendar. We'll be looking at the Forest Factory to see what we have installed for today. So I'm using the forestfactory.com. So let me share my screen. Give me a few minutes to share my screen. All right, so you agree with me that the week has been a very busy week. So for those of us that have traded within the week, you have seen how the market has behaved so far. In fact, since last week, the market has been very interesting. Now, this week, we are a week of NFP. So most of the times when we have this NFP in queue, the markets usually behave very volatile. So looking at today being Thursday, the 6th of March, 2025. So we are going to kickstart today with some high impact news on the euro. That's the Euro Summit. And then later in the day, we would have, sorry, am I looking at, okay, yes, the right calendar, okay. So later in the day, we have interest rates decision on the euro. Uh, okay. All right. So these are the few major news that we have today. Then we have unemployment claim at the United States dollar. I think that's just a few major news that we have for today. But there's something I want us to keep in mind that today we will have also interest rates decision on euro. So the ECB will be announcing their interest rates. The previous number is 2.9, and they are expected to cut the interest rate down to 2.65. I don't think that is not being reflected in Forex Factory. So it's not showing here in Forex Factory on Thursday. But if you look at this other calendar, which is my FS book, you can see that I have today being Thursday, uh, we have we have interest rate decision on by the ECB. So with that being said, we should expect a lot of movement on euro. Now already we are seeing that euro is appreciating due to some fundamentals coming out from the European zone. And so we expect that to be sustained. Now, but if interest rate is cut, just like we are seeing on the calendar, so from the calendar, you can see that the previous is 2.9 and is expected to be cut down to 2.65. If that happens, then we should expect to see a retracement on the euro or a retracement on the euro US. And then later in the day, we would have initial jobless claim on the dollar, and then the continuous jobless claim, and so on. So these are some of the high impact news that we have today. Basically, our focus will be on euro and on the dollar. And then shortly after now, or shortly before and after now, by 2 hours time, we have the PMI on the British pound, construction PMI on the British pound. So these are some of the major news. Now let's go to the calendar, the chart itself, and see what we can deduce from the price charts. So in a nutshell, from the calendar so far, it's clear that our volatile currencies today will be the euro and the dollar, basically, because these are the instruments we have high impact news on. So let me switch to the charts so that we can do some technical analysis. All right, so give me a few minutes. Let me share my screen. All right, so I believe you can see my chart. So I'm currently looking at, so this is AUD USD actually. This is AUD USD. So All right, sorry about that. I had a network issue, but now it's resolved. If you can hear me, please just indicate. Yes, you could not hear me because my network was off. It went off, and we are back on. All right, so all right, thank you very much. So someone is asking, someone is saying he wants to know how dollar affect crude oil, and if dollar is low, will crude oil low or high? All right, thank you very much. Yes, we are back on. Thank you very much. All right. So now I was saying that one of the things we observe is that we see weakness in the US dollar, and the weakness in the dollar is actually based on fundamentals. So I'll just quickly share, let me share my screen so that you can see some of the things that might be responsible for the weakness in the dollar. So this weakness in the US dollar might prevail for a couple of weeks. So we expect this to continue for a while. And then before we see any change. So, but for now, these are the reasons why you are seeing the current weakness in the dollar. So let me share my screen so that you can quickly go through. I want to just quickly show you this. All right, so I believe you can see my screen. So if you look at my screen, if you see my screen, then should see the headline I'm looking at. Why is the dollar weakening? Now, when you scroll down, you can see the major reasons why we have this sudden weakness in the dollar is because of the policies of the current administration on tariff. We know very well that with these announcements or with the imposing of tariff on Canada, Mexico, and in China, there are repercussions. There are repercussions. There's a boomerang effect, a negative effect on the US. I say. So one of the things that is expected, or one of the things that is said, is that the current administration hasn't done anything. There are no policies in place to cushion the effect of the backfiring of the tariffs. So these tariffs, they will definitely have some effect negatively on the economy of the US, United States. And so far, there have not been any policies or any measures to cushion the effects. Now,
No, no cash. No cash,
one
no
of the
cash.
All right. So I said one of the reasons why we are experiencing the weakness in the dollar is as a result of the policies of the current administration. So the weakness in the dollar has nothing to do with your technicals. So the technicals are not the reason the dollar is weak. It's because of the fundamentals. Uh, and it's simply because we know that when tariffs are imposed on other nations, just like the US has done, imposing tariff on China, on Canada, and on Mexico, there is a boomerang effect. There's a way it affects their own economy negatively. So what investors are hoping to see are they want to see some measures or some policies put in place to cushion the effect of these tariffs being imposed on other nations or other countries. So, but so far, there haven't been any. So what they want to see basically is that, so if you read down here, it says something like, say reflective of the broader policy disruption. So with this being said, they expect to see a rate cut. So despite this, the US administration is not offering any offsetting measures, such as tax cuts elsewhere or spending increases. So these are some of the measures that the market expect the US government to put in place to cushion the effects of the tariffs on other nations. They expect them to cut rates, cut tax or increase spending. But so far, If you have been following the news, you will know about the department called Dodge. This Dodge has been saddled with the responsibility of cutting spending. Now, if spendings are being cut, then that means there's a high tendency that the Fed, on the other hand, will most likely cut rates much more than they had anticipated. Because forecast that this year they would cut their interest rates twice. But from the look of things, there's a high tendency that inflation will also go back up. And if inflation goes back, then there's a high tendency, sorry, inflation will go back down. And if that happens, if inflation goes down, then there's a high tendency the Fed might want to cut rates more than twice. So this in mind, so if you read this article over here, you get an overview of why the dollar is currently weakening. It is purely fundamental and not really based on technicals. So with this being said, we expect further weakness in the dollar. And if you go to the charts, so let's now go to the charts. So if you go to the price charts, you will notice that the dollar is weak across board. Virtually all the instruments paired with the US dollar is showing strength against the dollar. So I'm currently looking at AUD USD. Now on AUD USD, that previously we had this trend to the downside. So with my trend line, you can see my trend line. There will be movement to the downside. And then at some point, we switch and turn to the upside. Now, this turn, the point where we made this turn, was where some that 24 years where Trump made a statement, not Trump himself, one of his spokesmen said that the tendency or possibility for the tariffs to be negotiated with Canada and Mexico. So that's one of the reasons why this Trump and also Canada basically slammed the US with their own tariff. All right, so what we are seeing a decrease in the strength of the dollar, and this is likely to continue. So looking at the AUD I would want to see a kind of retracement, a slight retracement of this move up before the continuation higher. So I'm expecting to see AUD give me a kind of retracement. So what I want to see is a retracement of this move to the upside, means a push down to around this region. So if we push down to around that region, so a push down to this region. So if we move all the way down to this region, from that point, you can expect to see the continuation much higher. So there are two options for those of us who want to trade AUD. First would be to either sell down to this region or buy from this area all the way up. In my view, or in my, I would prefer to buy from this area because we've already transited to another trend. Now, if you look down at this bottom, let me show this part. So if you look down at this bottom, this down part of this chart, you notice closely that we have a W formation, that's the head and shoulder. So we have the market fell, created a low down here, and then it created a much high, and then a lower low before we broke structure to the upside. So what that simply tells you that we have changed, there's a change in trend from this bottom. Now, when this happens, there's a high tendency for us to run high above the beginning of this move down, this trend. So there's a high tendency we might run all the way up to this high up here. But before then, I'm expecting a replacement on this trend. So if I can get a replacement to around this region of to around the area of let's say 0.62, 0.6330, 3030, that's 0.63030 all the way to 62775. So within this shaded region, I want to see a retracement at least to this region before we continue buying. Now you also notice that there's a pause. There's a pause. So on our way up, we paused at this region. Up here, there's a pause. So the market has paused where we are currently, which means there's already witness experience in the trend. So the trend is already experiencing some sort of weakness. You notice that we have these candles, more bearish candles at the top. And we also have less bullish candles at the top. So there is a high tendency for us to actually retrace to at least this region before we continue higher. So I would prefer to wait for the market to retrace before we continue higher. All right. So that's for AUD USD. Now, how about Euro USD? Remember, I said based on the fundamentals or based on the calendar, the two currencies that will most likely be in play this day will be Euro USD and AUD and Euro USD. So if we move to check Euro USD, so this is the chart of Euro USD. Now you should expect to see the same scenario. So this is almost the same thing that we are experiencing in the USD. So because the dollar is weak across board, we expect this weakness to continue for a while. Now you notice you can see this high. So let me draw this line up. Now this line gone up here. That's the high from the previous week, the previous day's high. Not previous day, some weeks back. So this is a resistance, which I will be expecting a mild retracement of Euro USD. So from this region, I will be expecting a slight retracement before a continuation higher. Now, if I switch to H1 to look at the previous day's movement, so this is yesterday. This is yesterday. If I draw my feet from the low of yesterday all the way up to the high of yesterday, what I want to see is a retracement to at least this region. Now, some of you might be wondering, if the market will retrace all the way down here, why don't I sell that? Yes, there are many ways of making profit. Deciding to sell all the way down to that region, but in my opinion, I would prefer to wait until the market gets that. But already we are off. So I do not subscribe to trading against the trend. I would prefer to trade the direction of the trend. So if you think you have the will and the might to trade against the trend, then you sell from this region, you put profit down within this zone. Else, the best to wait for that to happen to buy. Now, there's a high tendency that this instrument might decrease. Remember, I said we have interest rates on the euro today. And the estimate is that they are going to cut the interest rate by 0.5. Now, if that happens, then there's a high tendency for the euro to depreciate. If euro depreciates in price, then this replacement that we are waiting for might just occur on euro USD. Remember, the trend is already to the upside, and there are very reasonable targets to go up for the euro to achieve or to get to. So, but before we get up to those targets, it's right, or let me not say it like it's due for a replacement. Yes, so euro USD is due for a replacement. This is the daily chart here. So to see how the market has been pushing up, relentless. That tells you that there is a high tendency for us to increase. Also note that the reason why we will most likely will continue higher even after the retracement is because see the sizes of the candles and see how the candles are closely, strongly above the previous candle. So you see how the candles are closing strongly above the previous candle. That's to show you that there's enough strength, there's enough momentum to the upside. And today has not even started. We've already closed, we've already broken above yesterday's high. So we've already created a new high, a high that is higher than the previous high. So with this being done, with this happening, there's a high tendency we might increase. Now, this move yesterday, we didn't have much high impact news yesterday, but today, the interest rate on the euro, so this is what I'm expecting to see. So I'm expecting to see something that looks like this. The replacements all the way down to around this region, the, from that region to higher. So that region is simply by Fibonacci 61.8%. I just measured Fibonacci 61.8% using yesterday's price action. From yesterday's low to yesterday's high, the replacement will happen at least 61.8% before we continue pushing higher. So that's for Euro US. So let me go through your questions and then answer your question. But if you have any currency you would like us, if you like it, if you have any currency you would like us to go through, please feel free to drop your comment. Just give me, drop the currency you would like us to go, you would like me to go through with you. I would need like 3 or 2, let's say 2 different assets. So someone is saying my audio is low at some point. Yes, I think I've resolved that. Yes, it was actually low. I've resolved that. So sorry for the poor audio quality, but it has been resolved. Yes, thank you very much. Thank you. All right. So I'm seeing a lot of JPY. Yes, a lot of JPY, and then I'm also seeing gold. So I have Euro JPY, Pound JPY, and Chef JPY. Now, the JPYs would most likely act in a similar manner. Yeah. So currently, the JPY should, I think the only instrument that is behaving differently among the JPY is Chef JPY. So, but let's start off with the Pound JPY. So let me share my screen and then move. Let's see the Pound JPY. All right. So one of the currencies that is actually performing well is the British pound and the Japanese yen. So if you have been following up the news on the, so far, the Japanese yen is one of the strongest currencies because uh, the BOJ have hinted that they will likely increase interest rates one more time. So there's a high tendency for the rates to be increased. So because of that, we notice a renewed buying of the Japanese yen. But on the other hand, the British pound is also one of the best performing currencies so far. So what do we do? You notice from last week, so I'm on H4 currently. So from last week, we had the markets in the range. So throughout last week, the market was actually ranging as shown in this shaded region. That's to let you know that the British pound and the Japanese yen were actually strong. They were actually performing well. So this pair, as of last week, ranged because they were strong technically and even fundamentally. So, but this week we began to see some breakout of that range. That's because we have more strength, more buying on the pound than on the JPY. So from what you see on the screen, there's a high tendency for us to push higher for the British pound. Now, we will only need to check the calendar to see the days that we are likely to have that volatility on the British pound. Definitely not today. So any other day we have a much high impact news on the British pound, we expect that to move higher. Now, if you look at the charts, so I'm on H4, you notice that we have these levels, this line I'm drawing, the line in black. Now, this particular line is a previous high. So this line shows you the highest price from some weeks ago, 2 weeks ago. So we have 2 weeks touching this same level all the way up here. Now, anytime you see something like this on your chart, where you have a weekly highs or weekly highs almost touching each other, just like you have here, what we refer to as equal highs, there's a high probability for the market to run through this high. So what I'm saying is, you see this point up here and this other point. Now, let me shade it with a gray line, a gray box. So I'm referring to this region up here and this region. So you see these regions up here, these two regions, there's a high tendency for us to run through this particular price line. Now, this is a resistance. This is what many of us refer to as resistance. What that simply means is that there's a tendency for the market to fall from this level. But if you have traded long enough, you will notice that 90% of the time, it doesn't actually fall from that level. Once the market hits a certain level twice or three times, there's a high tendency that the market will run through that level. Why? Because we have a lot of liquidity residing up here, above here. So this is an attract. This is like a magnet. It always attracts price. So when the market comes all the way up here the next time, there will be those who will be expecting the market to drop. A lot of retail traders, you and I, will be expecting a drop in price. But unfortunately, the market may not really drop as much as you had anticipated. Might just retrace a little and then push through. So anytime I'm trading and I see these kind of levels on my charts, it gives me a confirmation that this instrument is poised to go higher. The market is already preparing itself to run higher because with this kind of levels, what it does is it attracts uh, retail sellers and more institutional buyers. So we'll be expecting this instrument to go higher. So if you're trading pound JPY for this week, my anticipation is that we would most likely see an increase in price, a run above this level, this line shown as black, which is two highs from some weeks ago. This is H4. I'm looking at H4. So each of these highs are weekly highs. So I expect the market to run above this high and most likely run all the way up to the green line that you're seeing on your chart. So what I mean is the market running all the way up to at least, or yeah, at least this region. But the retracement is most likely also. So I would most likely want to see the market retrace to around somewhere within this region. And then from this point, I would want to buy. So if I'm to trade or buy these instruments, I would patiently wait for the market to retrace to at least this region. So if I'm trading this instrument, I would most likely wait for the currency to retrace all the way down to around this region. This is the region of 190.25 and 189.400. So within that region, within that zone, I'm expecting the market to come within there. And then once the market gets to that area, there will be some confirmations that market is now ready to go higher. So from that point, you can take your trade. Now, for those that are aggressive and has the, that can set their lots, stop loss much larger, you can enter the trade from where the market is currently. But I will not advise you do that. I would want to see a much deeper retracement, at least to this region. Now, this region I have just shaded is if you use your Fibonacci and draw from today's and draw from this low. So look at the low I'm marking from this low all the way to this high up here. So you notice this region is around your 61.8%. Uh, so I normally use just Fibonacci for my analysis, waiting for retracement. And I feel that's the best way to catch good moves. You don't want to be buying at the peaks, neither do you want to be selling at the lows. You want to wait for the market to give you a sort of kind of retracement so that you can enter your trades with a much tighter stop loss. All right, so that's it for pound JPY. Now, for pound JPY, I would expect the same thing to be happening on the AUD JPY. Now, AUD turns out to be one of the strongest currencies so far because there's a high tendency for the Reserve Bank of Australia, to hold on their interest rates. Now, they've only cut interest rates once. So while other nations were cutting interest rates multiple times or several, they never cut. They've always, in fact, this is the first time they've cut in about 2 years or a year, in about 2 years. So for 2 years now, this last month was the first time interest rate was cut. And there's a high tendency they may not even cut any more further. Or if at all they should cut, maybe around April. So with that being said, the AUD has been one of the best performing currencies. Remember that in the forex market or in the currency market, everything revolves around interest rates. So if you can understand what that means, then you have a better chance of catching good trades in the market. So I expect the same thing to be playing out on AUD JPY. So one of the comments I had, AUD JPY, pound JPY should do the same as Euro JPY. Now the only instrument I'm expecting something different is CHF JPY. So CHF JPY should give us something different. So let's quickly look at CHF JPY. All right, so this is CHF JPY. So I'm expecting something different in the sense that I want to see JPY overpower CHF. So the JPY, so for CHF JPY, there's a high tendency for this instrument to depreciate. So I want to see, I'm expecting the Japanese yen to break below this low. Now, if you look closely, I'm just talking, I don't even know if I'm being heard. So please, if my volume is clear enough, just indicate, let me know that I'm being heard. Now, look at the line I have drawn below. So this line below, just like I indicated or I mentioned earlier, that these are the kind of trades I am actually looking for. Yes, thank you very much, loud and clear. So I'm looking for instruments that has bounced off regions like this. So you can see we have this level first time, we have the second time here. So I am referring to these 2 points. This is CHF JPY. I'm referring to this point and this. So we have a bounce from this level the first time, and then we have a bounce the second time. Now, anytime you see something like this on your charts, especially if this is happening on the H4, most persons will assume that when the market comes back down to this region a third time, that it will go back up. But I can tell you that 90% of the time, the market will not get here and go back up. Market will break through this level. So this level that you see here is attracting a lot of selling, a lot of selling. A lot of persons like the retail traders would be thinking of buying from this region. But I can tell you that this market, if you follow up this instrument, you will notice it's definitely going to break this low. So anytime I see this kind of structure in the market, I always know that the market is ready to break this particular level. Once it touched the first time, the second time, take note that this is the major touch, but we have this test, this close, these other regions where the market got very close and went back up. So with this, I'm expecting CHF JPY to run lower, much lower, drop all the way down. So if I'm to take a trade, I would go to a lower time frame like the H1 and then wait for a retracement before I proceed with a sell. Now, also note that this instrument has been in a range for quite some time. So we've been in this range for quite some time. So in my opinion, I would not even want to trade an instrument like this because of this kind of range. I would prefer to wait for a breakout either to the downside or to the upside before I jump in. But there's a high tendency we might break out to the downside. But if you don't mind, then look for opportunities to sell all the way down here. If you must buy this asset, wait until it breaks below this particular level. Once it breaks below this level, then you can engage with the buying. But for wealth I'm seeing currently, it's much safer to sell than to buy. All right, so that's for the CHF. All right, so someone's saying Euros JPY. Now, Euros JPY should be the same thing as pound JPY. They're just the same. The only difference is that the pound JPY has much ground. It covers much ground than the Euro JPY. So what that means is that the pound JPY is much more volatile than the Euro JPY, but you should see similar structure because these two pairs are positively correlated. So whatever pound JPY is doing, there's a high tendency that Euro JPY will do the same. All right. So the next asset I have on this list is gold. Yeah, gold. So let me quickly look at gold. All right. So for gold, we see how uh, gold has dropped from its all-time high. So we've retraced from the all-time high. And just like I said earlier, with the weakness in the dollar, there's a high tendency we might still run higher. Now, if you look at the same structure I mentioned earlier, if you look up here, so look at the line I just drew. There's this level up here, which many of us would call resistance. You see how the market hit. So let me share that region. So I'm referring to here and here. So look at this region. So you can see this point and this point. So like I said, once I see this on the chart, I know that the market is most likely to run towards this region. I don't know if we will retrace, if we will reverse from here, or we will break through this. But what I know is that the market will run to this region because what we have here is the classic resistance where a lot of traders will be assuming that when the market gets up here, it will drop. So whether the market drops from here or breaks through this region, what if one thing is set is that the market will run towards this region. That's one thing that's sure. We don't know whether the market will drop from here or break through. But most of the time, it breaks. But one thing is certain is that market will go here or market will get here. So what that means is we can buy all the way up to that region. So for gold, currently, I don't see any sign of selling in gold. I don't see any business for sales, especially when you put the fundamentals into consideration. There are no much reasons to be selling gold. If I'm to take a trade on gold, I'll most likely buy. Now, I'm looking at H4. So what I'm currently looking at is H4. Now, what that shows is that on the H4, the daily demarcation, these demarcations are weekly. So what that means is this is last week. So from this high to this low here, that's last week movement. And then we have this week. Now, one of the things we observe about the market is the market has the tendency to run highs and lows. So the market this week will most likely run last week's high or last week's low. That's how the market moves. It gravitates towards previous highs and lows. What I mean by highs and lows is this is last week's high price. So look at my cursor. This is last week's high price, and this is last week's low price. The market will run towards one of these levels, either this low or this high, one of them. But if you look closely, you can see that there's a tendency, there's an inclination towards the high rather than the low. And so what the market has done so far is a push towards the high. But if you look closely, you can see we are currently in the range. Look at this range. So let me change that color to something you can see together. So look at this range. this blue region, that's a range. So we are currently ranging. Now, this area, if you draw your field from last week's high price to last week's low price, you notice that this area is your 61.8 on the Fibonacci. So this is the area of 61.8 rather, on your Fibonacci. So between 61.8 of the Fibonacci, it means that the market has retraced substantially. And usually when the market gets to 61.8 like this, remember the drawing is from last week. So this is last week's high to last week's low. And then there's a retracement to 61.8. I would have expected the market to drop from this region. So from this region, I would expect the market to drop. But this drop would happen if there are fundamentals in favor of the dollar. If there are no fundamentals favoring the US dollar, then there's a high tendency the drop might not occur. Else, we have stayed in this range or in this region for too long. That's why you can see the market is ranging in that region. If there to be a drop, this drop would have occurred since. It wouldn't have ranged or stayed too long in this region. But hence, we have stayed too long. There's a high tendency that we might just continue higher and break above last week's high price. So there's a high tendency that the target is last week's high price. If it doesn't happen today, it might happen tomorrow. So what do we do? I will be bullish on gold rather than bearish. So I'll look for more opportunities to buy gold than to sell gold. So if you're thinking of selling gold, you want to do it very cautiously. But I will advise you look for opportunities to buy rather than sell it. So this is a good opportunity to be buying it. So you see yesterday's, this is M15. So I'm currently on M15. And on M15, we've had a reasonable retracement. With this kind of retracements, I would want to see a further push to the upside. If this push to the upside doesn't occur today, then most likely we will see that tomorrow. So on gold, I am bullish. All right, so that's for gold. And so let me go through the questions now and see if I have any other suggestions. All right, so all right. So that's what we have for today. Any other question? Do you have any other question on what we have discussed so far? So we've looked at Euro USD, and I've said on Euro USD, I'm expecting a retracement and then a continuation higher. Same thing goes for the Pound USD, the retracement and then a continuation higher. Note that, just like I said earlier, the dollar is fundamentally weak because of the expectation of traders. So at least for this week, we might see continued weakness in the dollar. And technically, you can see that the dollar is weak across board. So the best chances is to, all right, so someone is asking, what is the essence of the Fibonacci? Now, the Fibonacci is used to measure retracement. That's the work of the Fibonacci. It measures, so whenever there's a trend or there's an impulse or an expansion in price, if there's an expansion in price, the law states that there's going to be a retracement to at least 61.8% of that expansion. So, so let me use the chart to quickly explain. Yes, I'm not sharing my screen. I want to share my screen now. So let me use the chart to quickly explain the question asked by this person. So let me explain with the chart. Now look at this on the chart. So I have this expansion in price. I have this expansion in price or this movement in price, the sharp move. So the Fibonacci is used to measure only retracement. It doesn't take the trend, but it tells you the extent to which an instrument would retrace. So I have this movement in price. Look at from this low point all the way up to this high point. Now, the Fibonacci is saying that once there's a movement in price like this, an expansion. Now, how do you know an expansion? An expansion is a move that has series of candles in one direction. So, for instance, an expansion would be something like this. Look at this: green candles, green candles, green candles, no bearish candle in between. That's an expansion. So we have series of green candles to the upside with no bearish candle in between. That's an expansion. Now, so it's saying that from the low, this movement to the upside, that there's going to be a retracement. And if there's a retracement, that retracement will be at least 61.8%. So if I draw my Fibonacci from this point here, which is the lowest price for that particular day, to the highest price for that particular day. So from this low price, so this is a daily demarcation. This line, this separator, this is a demarcation for this day. So what I have done here is just the low of that day. That's the lowest price that was created on that day, because so far that's the most recent expansion in price that we have seen. That's the if you from the current price, if you look behind, you will notice this is the most recent sharp impulse move that we have experienced in price so far. So from the low of that particular day, where that expansion began, to the high of that day, you draw your Fibonacci. So what the law is saying that there's going to be a retracement to at least 61.8%. So this blue line I have just drawn is the 61.8%. This blue circle, this blue box, that's the 61.8. So that there's going to be a retracement to at most that region. So if you're buying or selling, if you're buying in this case, that's where you wait for the market to retrace to before you buy. So in this case, you would have taken a trade within this region. So if you look at my Fibonacci, you notice there's a number shown as entry. I don't know if you can see it clearly. There's a part of the Fibonacci which I have labeled as entry. Look at it. So this number that is shown as entry is 70.1, which means if I'm to take a trade on this asset, this point labeled as entry is where I would have taken a buy trade. I will wait for the market to get there before I take a buy trade. That number there is 70.1. It's just the middle number between 61.8 and 78.6%. If you add the two numbers and divide, you get 70.1. So that is my entry point. So this is in response to the question that was the essence of the Fibonacci. Fibonacci is used to measure retracement. It is used to gauge the extent to which a market will retrace. There's a law that states that retracement will most likely be somewhere beyond the midpoint. The midpoint is 50%. So somewhere beyond 50 in an uptrend, somewhere beyond 50 is 61.8. So within that region, you expect to see the market retrace and then go back up. Correct. We are currently looking at it. There's another sharp movement to the upside, another impulse. That impulse is from this low here. Look at this low here, all the way up to this high on gold. Now, based on our theory of the Fibonacci, we expect a retracement to 61.8. This is 61.8. So if I'm to take a trade on gold, I'll be looking for entry around this region, a buy around that region. So within that region, I want to see the market show signs of weakness and then turn. Now, if the market doesn't turn within this region, and then it gets to 79, look at this number, 79. It means it's no longer a retracement, but a reversal. So once we get to 79, it means we are no longer retracing. It means we are no longer retracing if we get to 79, but we are reversing. All right, so I want to believe this is clear. Is it clear? Please, if you understand what I have just explained, just type clear in the chat. Just type clear. If you understand what I've explained, type clear. All right, so good question. Time frame does not matter. Time frame does not matter. Semi-clear. So you say this semi-clear. Unfortunately, we do not have enough time to explain everything. So yes, the time frame actually does not matter. You can use any time frame. what you're looking for is movement, impulse movement or expansion in price. That expansion is all you are interested in. So the retracement you are looking for is the retracement of that expansion. All right, so very clear. Thank you very much. So for those that don't fully understand, hopefully we'll have another session and maybe we'll do further explanation. So all right, now if you cannot draw the Fibonacci on your phone, you can check YouTube. There are many videos on YouTube that shows you how to draw Fibonacci. Remember, it's not used to get trend. It does not show you trend. It shows you retracements. So it helps you to measure retracement on a move so that you have an idea of where a retracement will likely end and when a retracement is no longer a retracement but a reversal. That's the beauty of when a move is no longer a retracement but a reversal. You can get it, you can detect that using the Fibonacci. So thank you, ladies and gentlemen. I want to believe that you've learned one or two things from today's session, and hopefully we'll see again some other time. So my name is Don Deo. If you have any questions, you can reach out to me. I will drop my number so that you can reach out to me if you have any questions on what we have just discussed. All right. So thank you very much. See you some other time.